Hello and welcome to Bloomberg Quint. We are joined by Mr. P.S Jayakumar, the MD and CEO at Bank of Baroda, who's fresh out of a result announcement that sort of, again, a little bit surprised the market. You have reported about a 710 crore net profit after the amalgamation got completed. Now you've given some comparative figures, but overall, as you look at the business and as you look at the quality of the balance sheets that have been merged, what do you see in terms of profitability in the coming quarters by the end of this year?
So, the points that you make are all valid. The concerns relating to the overall quality of the portfolio. There have been concerns around the speed of recovery on account of the NCLT and IBC processes.
Sure.
But broadly, if I were to look at the story, it is this, that the Bank of Baroda part of the amalgamated vehicle has by and large performed consistent with what has been there in the previous 5 quarters, represented by a strong growth in the loan book, a strong growth in the deposit book, improved net interest margin, slippages fairly consistent what was in the back.
Sure.
So that's what it is. But when you look at the other 2 banks and the branches of the other 2 banks, there is a certain degree of time adjustment that's required to new systems, new processes, new products that are now harmonized. And as far as Dena Bank is concerned, we have to recognize there was no lending up until March of 2019.
Sure.
So you have to give a little bit of time for these institutions to start performing to their full measure. And we will begin to see that happening from this quarter, and then it'll improve in the following quarter, and so on. Well, I would expect that the Vijaya Bank would rebound faster because it's been otherwise also a very good, well-run institution. And I think the Dena Bank pickup would also happen as we go into the quarter. So coming back to the number, 4,300 crores mathematics of operating profit this quarter.
Sure.
Extrapolated something between 18 to 20,000 crores. I still think we have a reasonable probability of delivering something between 3,500 to 4,000 crores of net income. That would give us, although single digit, a high single digit return on equity.
All right. Let me quickly come to asset quality, because that has been something that keeps getting discussed every quarter. But you know, while you were announcing the results, you announced a watch list about 16,500 crore. Now that has gotten people a little worried about the future course of what that gross NPA number is finally going to look like. In terms of the quality, the origin of these watch list loans, is this mostly coming in from the other 2 balance sheets that you have amalgamated, or is there a significant chunk of Bank of Baroda as well?
Well, in a proportion sense, those 2 banks contribute more, but in absolute terms, certainly not. Of the 16,500 crores, approximately 10,000 crores is with the BOB portfolio, and the balance 6,000 is with those respective 2 portfolios. So that's what it is. So in the scheme of things, as we look at it, we would say, let's assume a 70% kind of slippage. You know, it could be 50, it could be 80 or 90, but I'm just using a number, 70%. So you take 17,000 and multiply by 70%, you come to something in the 11, 12,000 crore kind of slippage. And that is something that we are kind of factoring it in our own analysis. Maybe some of it is front-ended, so your quarter 2 is much higher, and then quarter 3 comes down. But let's say, for the purpose of discussion, these are all evenly spread.
Correct.
Then the question is, how do we look at recovery? And we feel comfortable with all the changes that are happening to NCLT, plus the effort that is going into collection. Things should improve, and we should be able to get a reasonable amount of that money recovered back. And so when I overlay the recovery and then overlay the provisions we are going to take in normal course, let's assume that provision is 1.75% of our average receivable, we will come back to a position where our net NPA numbers would actually trend downward, and we still feel we'll reach the 3% number. Now, what has made a difference between the last quarter and this quarter in terms of the watch list is a deterioration of about 4,500 crores on an exposure to the non-bank finance company, coupled with our exposure to a Ahmedabad-based company in textile business.
Sure.
So those 2 are the ones that have come up, which was not there previously. And in effect, whatever has flowed through in the quarter has been substituted by the same amount. So as a consequence of which, the watch list remains at the same level as last year. as the last quarter. Broadly, that's what the position is.
Okay, fair enough. But let me also get you, because you mentioned a few areas where the stress is emanating from. But in the last few months, or since September at least, we've seen the macro environment as well as the financial sector environment deteriorate significantly. Firstly, how do you see this as a bank? Probably one of the better placed banks in terms of capability of lending. How do you see this financial sector deterioration going forward? And secondly, there has been, in terms of defaults, now there is a wide variety of sectors that these defaults are coming from. Where do you see the stress firstly growing and then finally stopping?
So as far as the financial sector is concerned, when you look at the data, whichever company has been on the retail side of the business, there has been no stress. Even if you were to take the DHFL portfolio as a kind of an example, the stress is not from the retail portfolio. That's performing, from whatever data points we have got, quite close to what is expected from that portfolio.
Sure.
The challenges are largely on the wholesale account. There is also, in some cases, governance issue where the funds have not been used for the intended purposes, but probably have been applied towards supporting group companies, etc. And so that's another kind of a problem that is there. But I do think when I look at our own portfolio and look at the total amount of exposure we have, there are about 140, 150 companies in that portfolio, including microfinance institutions, commercial vehicle players, personal loan lenders. We find the stress is largely limited to the companies which have a large real estate exposure. Sans that, it looks quite okay. So I think as these institutions find a way of boxing that risk, you would see an improvement in the situation. The other question that keeps coming up is around the lending of banks to the non-bank finance company. And our position on this is that we continue to remain focused on it, but the incremental disbursement are coming more in the nature of co-origination programs, largely because we are close to the sector cap with respect to the NBFC exposure.
I see.
So we are in some sense amplifying the disbursement in that the repayments that are happening are going towards a 20% component which was contributed by the NBFC, and the balance 80% component is directly coming into a balance sheet. A good outcome of this is that we approve the transaction ourselves, we do the KYC, the collection is with us. So in a sense, the portfolio quality is much more clear as opposed to lending to a company, NBFC company, on a pari passu basis.
Sure. But in terms of buying portfolios, is that still a business? So
it's a good question you're asking, and there are some people who are nervous about buying a portfolio. And as long as we are very clear that buying of portfolio is not as lending in a way and calling it separately, it should be okay. Specific to our bank, in all the portfolio purchases we do, we take over the collections. The repayments come directly from the customer to an escrow account, and from there it gets parceled out between us and the originating institution.
Sure.
Therefore, we feel very comfortable in saying that with respect to the portfolio we have, the people who are the borrowers are the borrowers, because we have the repayment money coming in directly from the account with their name. We have done a number of verification, title, this, that, etc. So when you take all the data together, it tells the same story. So in that context, and the scores of these are considerably higher, in fact, on an average basis, better than our own portfolio.
Sure.
So keeping all of these things in concern, I think we feel really comfortable about our current exposure with respect to the portfolio purchases that we have done.
Okay. Now, while announcing the results, you also said something about the fundraising side of the story. You've asked about 4,500 crore from the government, 1,500 crore from this employee share purchase program. There's also some option available on the QIP side. How are these things going to pan out?
So we're not asked, what the government does in terms of distribution of the 70,000 crores that has been allocated would something that we will know as it goes by. But as prudent people, we have to assume nothing is coming, and we have to plan for our financials. We have to remain independent, right? To that extent, we are focusing in this quarter on raising funds from employee or stock option plans, as well as from 81 issues. our shareholders, board, etc., have approved it, but they require a level of approval from the government, which I hope would be coming through as we go through this quarter. So that's something we want to box in and get it earlier. Depending on how we face it out, we're looking for about 7,500 crores of fundraise through this combination of factors.
Okay.
Now, as far as QIP is concerned, I think it probably the right time would be to look at it sometime in Q2.
Okay.
Assuming, and this is based on the assumption, we will deliver a good Q2.
Sure.
On the other hand, for any reason, some of these regulatory approvals do not come in, then we'll have to fast forward the QIP program. But at this point of time, sequentially, we'll get these two fundraise completed, and then we'll go with the QIP sometime.
And the QIP fundraise will be approximately the same 7,500, 8,000 crore range.
So we have a 68% ownership of the government.
Right.
So we have reasonable elbow room as to how much we can raise. We come to that at that point of time. At the end of Q2, we'll also have a fair sense around our organic profit that's going to come during the course of this year. We have to factor that in as we think about capital raise.
All right. A few questions around the business as such of what Bank of Baroda is carrying at this point in time. You know, you've talked about synergies working out and you know, people eventually coming into the same systems and then delivering. But in terms of challenges, what was probably the biggest when you talked about the merger?
In all mergers, there are three distinct challenges we have got. One is that on a more theoretical level is how is the strategy of the firm defined such that it's better than the sum of the parts,
Sure.
which is what any merger is supposed to do. I'll park that aside. That's one aspect of the challenge. And when you don't have a good story for the banks to come together for this amalgamation merger, then you need a reason, you need a purpose, you need a justification, you need to have an objective. So that has to be laid out. The second element of the challenge is with respect to the human resource element, getting the organization together. To some extent, in our case, these issues are less complicated because we all have a public sector personality as well, in addition to the individual bank's personality, and the compensation structures tend to be near similar, and we have already corrected it to make the best of what is available in the three bank. So that process is slowly fitting in, but it takes some time for people to get used to each other, get to a common culture, work in the same level of efficiency. That's being rolled out. But the larger challenge is the technology and the integration of the platforms, everybody coming together. And that is not something we can control ourselves. We depend on various service providers, etc. Now, so that exercise is likely to take a couple of years to get completed. It's not all going to happen 2 years from today if they're happening in parts, but the entire culmination of that would take 2 years. So as I think about the synergies as well, we think they will start rolling in now. Some of the easier things like selling excess premises and then looking at merging branches that are close to each other, all those will get done. But the real benefit of working out of a single platform, single technology, saving on data center costs, saving on technology licensing costs, etc., those will take a little while for that to happen.
Okay, fair enough. There has been a lot of commentary from the Supreme Court, from a lot of investigative agencies about banks and their role in companies which, quote unquote, have defrauded the people who have dealt with them. Recently, in the Amrapali case, Bank of Baroda got pulled into that order as well. And there have been allegations by the SFIO in a number of cases. Does this environment sort of make it difficult to then look at newer borrowers?
No, the regulation and legal process are what they are. We continue to stay focused and do our work, which is essentially go about building the business as we plan to. And we would have a good explanation, I would assume, for all that is being said on Amrapali and elsewhere. And the exposures, in any case, are not very significant at all in any manner of speaking. But if you were to just use Amrapali not so much as that account, but as a general context, I think the overall view we have is that don't get distracted by whatever is being reported in the media, something happening elsewhere. Let's just stay focused and keep doing what we are doing. And the significant change we have done with respect to the lending is essentially to move to a much more program-based lending.
Sure.
So there are scorecards. The second thing we have done is the segregation of responsibilities in a very significant manner. So the credit office, front office, back office are all separated. So the issue around arguments around collusion will be less. And three, we're improving the quality of documentation, underwriting standards, etc. So I would think the newer version of loans that we have underwritten the last 3 years, it would be of a better quality and also would be better documented. So when and as and when the investigative agents, should any of them go to the investigation, there would be enough trail to quickly come to a conclusion of what the issues are.
Okay, fair enough. One point on the overall macro scenario at this point in time, how does that bode for banks that are probably now coming out of that whole PCA framework, finally being able to actually do the lending? Current macroeconomic situation, how does that pan out?
So we have, all commentaries indicate that in this quarter there has been a slowdown in the growth of the bank and growth of the economy, and there has been a reduction in even in consumptions. So that's fact. I think there are 2-3 triggers that I hope will reverse the trends. The first trigger I would think about is the interest rate itself.
Got it.
A much lower interest rate would automatically give fillip for lending, etc. That's one thing I see that is happening. The second thing I see is certain budgetary matters, like for example, a higher deduction of tax, higher amount of incentives for, say, affordable housing or loans up to 40-50 lakhs. Those would also start kicking in, I would think. The third is a large amount of infrastructure-related expenses, infrastructure-related projects that are there. They should also start pulling their weight. So through a combination of government spending with respect to infrastructure, coupled with an improved interest rate environment in picture, and the fact that the NCLT matters, the IBC would start throwing up some big ticket resolution. All of this, and together with the government programs and the other government programs and the effect on the on putting money in the pocket of the consumers and spending, all of that should hopefully kick in, and that would mean that we can get back to our normal level of growth. We hope the curve is V-shaped and it happens quickly, but we have to, time will tell exactly how it is. On the balance, I feel that all things considered, I think we should see a pickup in the growth happening.
Okay. So happening by when?
I would think it will happen in phases, but I certainly think in the third quarter of this year we'd feel far more positive than we feel today.
All right. Thank you so much, Mr. Jayakumar, for joining us on this conversation, and thank you for watching.
Thank you very much.